Welcome back to The Fix. I'm Karima Brown. Well, SARS has suffered incalculable damage after it was ransacked by state capture forces, which led to the sacking of its former head, Tom Moyane, and is now recalibrating and strengthening its oversight mechanisms to get the revenue services fit for purposes. Other neighboring countries on the continent are, of course, in the process of building durable infrastructure around setting up mechanisms to enable these countries to be able to collect taxes and use it to improve the lives of citizens. To talk about this initiative in Africa, I'm joined by the Executive Secretary of the African Tax Administration Forum, Mr. Logan Wort. Mr. Wort, thank you so much for making it to the program. I appreciate it. You've worked at SARS. You know what happened there. How does the work on the continent that you do with various governments in trying to set up tax bases, tax collection systems, help? How does the lessons of what happened at SARS help you in the work that you're doing in other African countries?
Good morning. Thank you very much. I think it's important to note that the lessons from SARS comes in two parts. Firstly, there was the good era. And a lot of that good era was based on something called voluntary tax compliance, building a culture of contributing. And to have that, you must have a tax system that is fair, or at least perceived to be fair. And we've taken a lot of those lessons about voluntary compliance, about good, reliable, and dependable, transparent tax systems into the rest of the continent, where tax authorities in East and West Africa over the last 10 years have grown not only in their administrative efficiency, but strengthening their governance. One big difference between the South African tax authority and other tax authorities in the continent is that where revenue and customs are together in a tax authority like SARS, in all of the other countries, these authorities are governed by independent boards.
Wow.
South Africa, SARS does not have an independent board. I do think it's one of the recommendations of the Nugent Commission.
Yes.
But in particular, the tax commissioner is accountable to the minister, whereas in other countries that have revenue authorities, the tax commissioner has a dotted line to the minister, but reports to a board. And through that board, a lot of the accountability, the procurement, the appointment of senior officials, and this the general strategic outlook of efficient tax administration gets governed. And that's an important lesson of what has happened in the continent over the last 10 years.
Give me an example of a country in which such a board operates, how that board is formed, from which sections of society it's drawn, and how does it, in a way, almost depoliticize the accountability lines beyond just government, but to society as a whole?
Well, in all of the countries, the boards are made up of people from business, people from different sectors in the community, but in the society, but people generally who can make a contribution either to management, leadership, governance, audit, risk, like you have a company board. It's also important to note, whilst you are talking about depoliticization, it is not absolutely depoliticized in the sense that these boards are not generally appointed by a public process. Like in South Africa, you talk about Chapter 9 institutions and people are demanding a public process. In the case of the revenue authorities in the countries where we work, these boards are largely appointed by the ministers. The strength of the transparency and the accountability, and one can say what you want about that.
Yeah.
But the strength of it lies in the powers of the board. Now, we do have countries where the boards feel more, their allegiance more to the minister who appointed them, and do try to interfere in the running of a tax authority. It's not all over the place. But where we have strong functioning boards, especially in East Africa, you have boards that, although they're appointed by the minister, their accountability lies with the tax authority, and they also do bring out their public reports and accountable to the taxpayers at large.
Now, for our listeners who are and our viewers that are watching, give me a sense of which African countries you work in, and more importantly, what have been the major challenges in strengthening these institutions?
Thank you. ATAF is an African tax organization based here in South Africa. We have 38 countries as our members. Our latest to join has been Sudan. And of that, we have Francophone, Lusophone, and English-speaking countries, and Arab-speaking countries. Some of the biggest challenges faced by African tax authorities, of course, on the one hand, is administration, and just the level of skill of auditors, automation, dealing with corruption inside the tax administration system, and so on. That accounts to some of the tax losses that we experience on the continent. However, the biggest part of the tax challenge of the continent is the behavior of African subsidiaries of multinational companies. These subsidiaries takes out billions of US dollars annually out of the country through excessive interest deductions, excessive service and technical fees. Now, these are amount of money deducted before profits are declared, which means that these companies are not paying taxes that are due that economy has generated. In a country like South Africa, it has many consequences. Two that stands out. A lower profit declared gives a lower tax due to the fiscus. A lower profit declared also impacts wages. A lower profit declared in South Africa also means that those indebted BEE deals, those people cannot settle those debts because profits have been artificially minimized. And these profits then get shifted to low tax jurisdictions. And as a result, the African economy probably collects 30% or less of what is due in taxes. And that's the big battle that we are having. And the big the big challenge is strengthening African policy, regulations, and legislation around that.
Now, the one thing I want to ask you is that a lot of companies that are based in South Africa are registering themselves in Mauritius because it's seen as a tax haven. Is Mauritius a part of your forum?
Yes, Mauritius is part of our forum. And one of the things about basing yourself in what we call a low tax jurisdiction is that if you domicile yourself there, one of the things you look for is what is called a tax treaty, a double taxation agreement between the country where you live or the country where you do your business in and the country where you are domiciled. And so when you do that, you can then, through those tax agreements between Rwanda, Mauritius, and South Africa, for example, have a trade relationship where a multinational can end up paying no tax. Because it's domiciled in one place, its technical and human resource people are registered in another place, its procurement function is registered in a third country. Those three countries have a tax agreement that reduces things like, it's very technical, but reduces things like withholding taxes, determine minimum taxes, and as a result, the company slips, it is called treaty shopping.
Yes.
The company slides through those various tax agreements and end up paying very minimal tax. It's important to note that these are largely multinational, South African or not. What is the impact of such behavior on local business?
Yes.
If a local business has a tax rate of 28% and you are a multinational that has, through a number of tax treaties, through the deduction of technical services, overextended loans to the company of which interest is deducted before tax is paid, and all sorts of other deductions, your effective tax rate is 5%. You compete in the same market, selling the same vehicle or the same clothes to the same citizen, but you pay at 28%. The international company is paying an effective 5%.
Now, Logan, we've run out of time. I know that you've got a big event coming up, and of course, it is to, in a way, celebrate some of the achievements through this African Tax Forum that you've set up, but to also look at what can be done better. Just tell us about it quickly.
Yes, we are 10 years old this year. We're going to Kampala, where we were launched 10 years ago. So from 19 to 24 November, we will be celebrating 10 years of existence. And during that 10 years, especially in the last 3 years, we've collected $1.1 billion in taxes for 6 of our countries through changing some of the laws, strengthening the administration, building the capacity of auditors and others, and we'll be celebrating that. We'll be celebrating the fact that we've trained over 16,000 tax officials across the continent. Things are happening. Tax to GDP from 12 to 18%. In most of the continent, things are improving, and it's improving because we are building an African capability to do so. South Africa participates. It can do well to learn more from on the continent and not necessarily always look to the OECD or overseas for the answers. There's some really great examples on the continent.
Well, the boards that you're talking about is certainly one of them. Mr. Wort, thank you so much for your time and good luck with your 10th anniversary. Up ahead, the weekend newspapers get unpacked with my 2 journalists, Eusebius and Sikonati. Stay with us.